I just wanted to share an example of how in the past two videos I was talking about hypothesis-based testing using data to backtest your algorithm strategies and to use algorithms to really implement those hypothesis-based assumptions. And so I have this really neat program. It's called Think FOREX, and it uses Metatrader 4 software. I guess we should start with what Metatrader is. And Metatrader is basically a platform to trade Forex. And basically how with currency can be exchanged like stocks. People will implement trading strategies to make money based off of Forex trading. And so it's really awesome because it makes the whole process very very autonomous. I guess that's its inherent nature. And it makes trading less emotional, meaning that in terms of bias will be minimized to a point where you won't lose money based off of I guess in hindsight emotionally charged decision. So I guess we could start with the data that Metatrader provides. So how I was talking about in the last few videos about how data needs to be available to do machine learning. And machine learning is basically it's just math and stats. And so using math and stats, it's inherent that you need quantities, you need magnitudes, you need levels, amounts. And so data is necessary for implementing those machine learning strategies, because without data, you can't do machine learning. So with Metatrader right here, we'll go into the History Center, and Metatrader provides a whole bunch of rich information, which is really awesome for each. So I guess I should elaborate on why there's pairings between two currencies. The reason why is because in Forex trading, there's this thing called a base currency and a quote currency. And it's similar to where if you want to go on a trip and you want to exchange one currency for the other, you might get more one currency by the trade, or you might get less currency depending on where you go within any given amount of time. Same with Forex trading, but you're doing it intentionally to make money. And so these pairings are fixed. You can't really mix them up in whichever way you choose. Most of the base currencies are in the US dollar. And the quote currencies range from New Zealand to Japan to Great Britain to the Swiss franc. And what Metatrader provides in terms of data, in terms of relational data structures, structured data, which is an assumed property in supervised machine learning, is that Metatrader gives us a bunch of tick data. Tick data is the differentiation or new information of price of each given unit while a trade within any given amount of time is happening. And so we could see here with time, December 9th, 2016, and here's the opening trade. Here's the opening, the high, the low close, and the volume. So the open means that's this right here, 1.05449. This is the price that the Euro New Zealand pairing opens at. And within that given day, December 9th, 2016, the high was 1.05456 and the low was 1.05446. So it opened at this amount. The highest price that it got was here, this amount right here. The lowest that it dropped was here. And eventually, when it's all said and done, it actually closed at this amount, 1.05447. And this is just like the volume in units of how much was available for that given pairing to buy or sell. And so it's the same situation for each different additional pairing, and it's separated between daily, weekly, monthly, hourly, 30 minutes, 15, so on and so forth. So we can close this. And so we can actually see those illustrations that I put out like just right now. And these are called candlesticks. This is a candlestick chart. And Candlesticks was first, I believe, made, I guess, first put out in FOREX trading through Japan, this like graphical style. And it's really, really convenient. And why is it convenient? It's because that you see these bars right here. These represent, the white bars represent that it closed, that you actually made money on the trade. So what I mean by that is sort of like the opening price was lower than the closing price. And these wicks at the bottom and top of the candle, these represent, right here, this is like the highest price that the FOREX trading pair, in this case, the Australian dollar and the Japanese yen, got. So this is the highest right here. This is the lowest that I got, but eventually within this given day, September 17th, 2013, is that the opening was 99.187, high 99.253, low 98.787, and closed 98.845. So you see right here the opening and the close is switched, or is one's higher than the other, I should say. And with this red line, this is basically the mean regression. So this is just a trend line showing the current, I guess, health of the graph over time. Because if you saw each individual increment of a value within every short amount of period of time, you would sort of not be able to see the whole trend of the graph. So this is really helpful just to evaluate in a very broad aerial view what the trend in price or in profitability this pairing of currency will be. And so in terms of algorithmic trading, how I go about that is, well, I wrote this very simple program. See here, open the Metatrader window. And this is basically what's called an EA. So it stands for an expert advisor. But what it really does, it is an algorithmic trading program. So with this one right here, it utilizes the crossings of what are called the SMA 10 and the SMA 40. And what SMA stands for, it stands for simple moving average. So SMA 10 stands for the simple moving average within a 10-day interval. if I were to say the SMA 40, it's the simple moving average of a 40-day window. And so you would, think about it, that the SMA 10, the shift in its slope or its reaction time or its sensitivity to new incoming tick data will be much more reactive than the SMA 40. So how this program works is that whenever the SMA 10, we'll go into detail about this just to illustrate what I'm talking about right now. But it's that when the SMA 10 on the graph crosses the SMA 40 trend line from the bottom, that this program will actually enter what's called a long trade, which basically means it's committed to buying the currency. And so when it does that, it'll buy. And when the SMA 10 crosses the SMA 40 from the bottom, or from the top, that's when this EA or expert advisor or algorithmic program will actually short the trade, which means to sell the currency. And we'll just continuously do that, and we could see how much money it made over time. And so we could do that right now. The process of doing this is to click it, compile. And so you'll see here that so we're testing out the US dollar and Japanese yen. This yellow trend line right here is what's called, the simple moving average. So by moving it means that within every given tick data value, that'll contribute to the new average for that given instance of time. With the simple moving average is that its average is 10 tick values, because this red trend line right here, see here, the red trend line represents a moving average of 40 days. You'll see moving average 40 is that the trend line will actually react, given to the tick data, will react much slower or be less responsive to the moving average of the 10 days. Which, is in its nature. So when the SMA 10 crosses the SMA 40 from the bottom, so you'll see right here, the SMA 10 crosses the SMA 40 from the bottom, you can see this little blue arrow, and it says right there, buy $1 USD Japan. We enter a long trade, meaning that we buy the Japanese yen. And right here, you'll see that the SMA 10 crosses the SMA 40 from the bottom, from the top, I should say. And then you're going to enter a short trade, meaning that you're going to sell the US dollar Japan. And you're going to actually just continuously do that for the duration of time. So I hope that this video sort of illustrates on how tick data is very important, or historical data is very important in determining how we can backtest our algorithmic strategies to evaluate its performance, so that we can take or evaluate, make some assumptions on this performance within our historical data, and have a certain level of confidence in taking our algorithm into the real world, so that it could perform well and, within this given context, make money.